and that, if you read history, that's the case. I mean, there have been many, many hyperinflation. The problem is it usually leaves a big scar, like it did in Germany, which then led to them falling for the Hitler lie.
Yeah.
But hyperinflations, once they're over, if as long as people haven't killed each other, as long as you haven't, torn the thing apart, and you go back to sound money, it fixes itself. Human beings just want to get up and go to work and do honest things, take care of their families, and know that they can live in a secure fashion. And sound money allows that. Unsound money makes it a challenge, an enormous challenge, right?
Yeah.
Hi, everyone. Welcome to Smart Invest. Few people believe that stocks are rising quietly, and that skepticism may be the very thing propelling this market upward. Despite a 20% increase in the major indices, investor sentiment is strangely low. According to surveys, the majority of traders are still sitting on the sidelines. The headlines continue to highlight the threat of a recession, and the general level of market enthusiasm is abnormally low for such a robust rally. However, deeper forces are subtly changing behind the scenes. We may not be nearing the end of a cycle, but rather the beginning of a new one, according to important economic indicators, the historically limited supply of housing, and the steady pace of corporate stock buybacks. One of the few analysts who is taking a bullish stance is Leppard. He claims that the actual bull market began in April, and although many people deny it, the evidence is mounting. He notes that although manufacturing is still weak, this is normal when economic expansions are just getting started. 3 consecutive months of declining margin debt is an indication of sound skepticism rather than irrational enthusiasm. Large macro hedge funds, the major players, are still flat on stocks. Leppard cautions that the next upward move could be swift and strong if those heavyweights begin to turn bullish. This market is being driven by disbelief rather than hype, and ironically, that might be its secret advantage. Don't forget to like, subscribe, and enable notifications to stay updated, and stay tuned for more insights from Leppard's explosive interview.
Well, I think from 29 to 40-something was 25 years. So the crash of 29 took about 25 years to recover from. I think there was a period of time in the 60s, from 60-something, the peak in 67 or 68, 69 wasn't exceeded until 82 or 3. So it was a good, 15 years in that particular one. I mean, there are periods of time when stocks do not do well.
Wow.
Yeah, I do. Because it's in everything. The misallocation of resources, it's in everything. And, now having said that, there's a way that it's not worse than 2008 for stocks, and that is we almost do a crack-up boom.
Explain what that is.
Yeah, so a crack-up boom is where they literally print so much money that, in countries where currencies have been failing or have failed, like the famous charts of Venezuela and Weimar Germany, stock market booms.
Because the money's worth nothing.
Because the money's worth nothing. And the stocks, remember, stocks do represent a claim on the earnings power of a business.
Yeah.
If the business can adjust their prices to account for the inflation, well, then it does have some earnings power. So, I think it's entirely possible that if we go into red hot printing, we could reach nominal new highs much quicker than I'm talking about. But, so the question that gets asked there is this the big one where we go into, because a crack up boom you're on your way to hyperinflation or extremely high rates of inflation, like Israel had and others have had in various times. Are we going to that? I don't know. Here's a scenario, right? We have the 4 years here. Trump's thing doesn't work. We print a lot of money, but the money remains relatively sound. It's not a crazy big print. The economy muddles along. The red team gets thrown out. Blue team comes in. Andrew Yang is now vice president. I don't know who's president. Maybe he's, whatever. Stephanie Kelton is now Treasury Secretary. And they do universal basic income for low-income folks. They increase taxes on everybody. They do massive stimmies, to help people. And they make it very clear they're not going to worry about government deficits. Bitcoin will be $1 million and gold will be, 12,000, 15,000, right? I mean, and the stock market might be hitting all-time new highs. I mean, that's a scenario that could happen. Well, I think so. Yeah.
Because what happens to society in that scenario?
Yeah. Well, look, society is going to have difficulties almost no matter where we go, because we've gone into this bad condition, Keynesian economics. I mean, let's talk about the positive. Let's talk about how we fix this. We've got to return to sound money.
Mm-hmm.
And there's a chapter in the book called Policy Response where I wrote the speech I think the president should give. I wrote it, and it's pretty simple. It comes back and it says, look, Keynesianism is flawed. Here's why. We should be pursuing productivity where we balance savings with investment and let the interest rate find its natural market-driven level. Okay, that's the basis of it. And we pursued this Keynesian model, which is wrong. And therefore, what we need to do is we need to return to sound money. So starting immediately, gold, silver, and Bitcoin are going to be money. They're going to be legal tender with no capital gains tax. So you can transact in anything you want. You can use a dollar. We're going to let them all be free. Okay. So that's step one. Step two, we are going to eliminate the Federal Reserve. There's going to be nobody backstopping the banks. There'll be nobody buying bonds. There'll be nobody. If a bank fails, a bank fails. So you better start thinking about where you're going to put your money in your bank deposits. And three, we're going to eliminate the FDIC. So, you're not going to, we all know it's a joke anyway. One of the ways they managed to print money was like in Silicon Valley Bank. They printed a lot of money, and they did that because, Ackman cried and they talked about a systematic banking crises.
Yeah.
And so they came in and they broke the law. They broke what Dodd-Frank said they would never do. They did it. So as long as we have a backstop on the banks are going to continually over-lever, make a lot of money. When things go wrong, they're going to turn around and say, bail me out. And what the banks have done is they've effectively got a gun to the head of the economy. And they said, give us our damn money when we make a mistake, or else we're going to blow your brains out.
Mm-hmm.
And it happened in 2008. It happened in 2020 to a degree, and it could happen again. So that's the problem. That's the underlying problem. And so if we return to sound money, that won't happen anymore. And, let's not kid ourselves. Getting from here to there, it's not going to be pretty, and it's not going to be fun, and they're going to be losers. Particularly debt holders are going to be massive losers. People on fixed incomes, older people who don't have their earnings history in front, earnings capability in front of them. However, once we return to sound money, it's going to be really great. Okay. Like fabulously great. Like I was on a podcast the other day with a guy from Argentina who was a teenager in 1991. His mom would make money. She'd immediately go to the grocery store, buy the food because it would be more expensive. One day later.
Yeah.
He said it was horrible. The country, everything fell apart. It was awful. Okay. Nobody had enough to eat. Everyone was at each other's throats, the whole 9 yards. Currency totally failed. They reset to $1. They started using the dollar, basically a dollar standard currency in Argentina. He said within 6 months or a year, things were great. It was much better.
And that's their equivalent of going to a sound money.
Yeah, the dollar's still unsound, but back then it was a lot sounder than what they had.
Yeah.
And that, if you read history, that's the case. There have been many, many hyperinflation. The problem is it usually leaves a big scar, like it did in Germany, which then led to them falling for the Hitler lie.
Yeah.
But hyperinflations, once they're over, if as long as people haven't killed each other, as long as you haven't, torn the thing apart, and you go back to sound money, it fixes itself. Human beings just want to get up and go to work and do honest things, take care of their families, and know that they can live in a secure fashion. And sound money allows that. Unsound money makes it a challenge, an enormous challenge, right?
Yeah.
The market fell sharply on April 2nd and then quickly rebounded, taking most institutions by surprise. Retail investors, on the other hand, jumped in and bought the dip, emerging as the unanticipated winners. It wasn't a random recovery. Rather, it was the type of V-shaped recovery that markets have repeatedly witnessed. Now that tariffs have been clarified, inflation has decreased, and significant policy changes are anticipated by 2026, the outlook for the future appears surprisingly optimistic. For those who paid attention, opportunity spoke louder than fear. The market leaders of today aren't weak. Rather, chaos has made them tough. These businesses have fought through the fastest rate hiking cycle in modern financial history, a worldwide pandemic, historic supply chain disruptions, and uncontrollable inflation. But they have emerged stronger and reported actual earnings gains. That strength is structural, not coincidental. We may be on the verge of a breakout that few are ready for, given the likelihood of deregulation, the Fed's anticipated rate cuts in 2026, and the fact that many investors are still underweight risk assets. Then there is Bitcoin, which is in great demand from institutions and is currently 95% mined. Scarcity is the selling point, not a problem. Missing this wave could cost you more than just lost revenue. It could mean falling behind completely.
Surprised me if they were. I'm almost sure Russia must have been. I mean, some of the things Putin has said about you can't stop it.
Yeah.
I mean, it's kind of becoming common knowledge.
Mhm.
I mean, it really is. I mean, I tell you what I thought. One of the things I took away to get me absolutely convinced that that's the case. Let's look at the case of Larry Fink. Okay. So here's a very smart man who runs the largest asset manager in the world. I mean, trillions and trillions. I think it might be 7 trillion of AUM. BlackRock out of New York. And he was very anti-Bitcoin.
Yeah, very.
Yeah. I mean, it's a pet rock. It's nobody needs it. All the negative shit, right? And yet he's not a stupid man.
Mhm.
And so he obviously got read in and started reading it and studying it and thinking about it. And he came to the conclusion, just as Putin said, I don't think there's anything that can stop it. So he gets it. That statement alone tells me when somebody says there's nothing that can stop Bitcoin, that tells me they get it.
Yes.
Okay. Fink got read in or he studied it and he came to the conclusion. He said, well, let's see, this is probably going to happen. I got a choice. Am I going to keep knocking it and not, and miss the boat? Or am I going to accept that that's the new reality? And maybe I should figure out how to make money off it. And of course he has. He's got the largest ETF in the space. He's become positive about it. As you mentioned in his most recent quarterly report or annual report, he talked about how it could be. I mean, he gets it.
Yeah.
I mean, he totally gets it. And, that means that there are going to be a lot more of him in the future, And
Well, it was like when he was pushing the ESG thing, like whatever he says, everyone follows.
well, that's right. And I mean, and again, it's how comfortable are people being out on the ledge?
Mm.
I mean, take Ray Dalio. Okay. Ray Dalio is a brilliant macro manager, runs Bridgewater, built and runs Bridgewater, gold guy, and if you don't own some gold, you don't understand money or history is what he said. Great. And, originally I remember his comments 3, 4, 5 years ago. He's like, yeah, Bitcoin. Yeah, kind of maybe. He wasn't poo-pooing it, but he just didn't really buy it. More recently, it's kind of like, this is an emerging reserve asset.
Yeah.
He gets it now. I mean, he owned some back then, but he owns more now. I know that. And so, it's just seeping into everybody's consciousness.
What about on the gold side? Is it seeping into the consciousness there? Because you obviously are still have
Yeah, I got
at least half a foot over in the gold.
Well, and I get flamed by all my old gold peers who.
What do they think of the book?
I think they like it. Look, the first half of the book is, the problem, Keynesianism, money printing, fiat. I mean, what's not to like? And the first half of the book has nothing about, very little about Bitcoin. It's all about the problem. So I think every gold person who reads the book go, yeah, nailed it. Great. And that's why I own gold.
Yeah.
Perfect. Second half of the book is why Bitcoin is the best solution by far, like far better than gold. They don't always like that.
Mm-hmm.
Some like a Frank Juster, for example, is a billionaire, and gold investor out in Vancouver. And, I know him and he just doesn't accept it. And I get some really, nasty and angry DMs from Canadian guys who are like, you idiot, I mean, they just don't want to accept that, and really, scholarly, brilliant guys, a guy like James Grant, who runs Grant Interest Rate Observer, in New York. And this is kind of one of the pillars of sound money economics in the United States for the last, 40 years that he's been writing. And yet he just can't get there. It's just, they can't get their heads around the concept that there could be a technological solution that creates immutable digital scarcity. They just can't get there.
Now that the U.S. debt has skyrocketed to over $37 trillion, the Treasury is in uncharted territory, and cryptocurrency is subtly filling the gap. Not only is Treasury Secretary Scott Bessent's startling prediction of approximately 2 trillion stablecoins a daring one, but it also serves as a reminder that Washington is finally acknowledging that a new financial system is emerging from the ashes of the previous one. We may soon witness the U.S. dollar expanding globally through cryptocurrency rails in ways that traditional monetary policy can no longer provide. As stablecoins like USDT and USDC gain traction and laws like the Genius Act are imminent. Being ahead of the curve, Larry Lepard has always noted that although markets have survived all of the storms, including pandemics, sharp increases in inflation, and aggressive rate hikes, earnings have not only survived, but have increased. Crypto is now coming into that same resolute spotlight. Besant's endorsement of stablecoins backed by U.S. Treasury bonds is not an anomaly. Rather, it is evidence that digital currencies are gaining traction. A new financial era is currently being shaped as institutions prepare to adopt stablecoins, and lawmakers get closer to passing revolutionary legislation. This is evolution, not collapse. Bitcoin and stablecoins are in a prime position to not only survive, but also to dominate the cryptocurrency market thanks to the confluence of regulatory clarity, institutional appetite, and fiscal uncertainty. If you ignore this change, you run the risk of being a bystander to the most significant financial revolution of our time.